What is up, everybody? Welcome back to Bitcoin and Markets. Today is CPI day, so we are going to live react to that. Let me share my screen real quick here. Bitcoinandmarkets.com. Check it out. That's the web page. And here is the BLS website that we are waiting to update for April's numbers here. This one is still for March. While we're waiting on that, let's jump into this post from Zero Hedge. CPI preview. Down here, they get into what to expect tomorrow. One major provision, a red-hot CPI print, and the Fed will likely be unable to twist the narrative expectations for July or even September. Rate cut in time, absent something big breaking. Okay, so this is kind of the last CPI print that we're going to get before they make certain decisions going down the road. But we also know that the Fed usually is behind the 8 ball and something usually breaks and then they cut. Powell, however, back in January 2019, he paused early, sympathetically, and then in July of 2019, he cut. This is all before COVID. He cut 3 times in 2019. And so he has an MO of cutting early. So we will see if a lower CPI will actually give him the room to make these cuts in 2024. I still believe that there is a good chance of a recession starting in 2024, but it won't officially be declared probably until 2025 because of the way official recessions get announced. But okay, so let's take a look at what they expect. Oh, it's 8:30. So let's just jump right back into this tab and refresh. April, 0.3% month over month in April. Okay, so this is below expectations. I was talking about let's see, the Atlanta Fed, what's it called? The inflation nowcast was expecting 0.4%. I think the consensus was roughly 0.4%. And so 0.3% is a miss to the downside, which I have been expecting these misses to the downside. Let's quickly go and see what's going on with the markets. Here is Bitcoin. We can go down to the 5-minute chart and look at that. Look at that. Holy cow. Up to 64,000 already for Bitcoin, reacting to this drop of this April CPI, coming in under consensus forecast of 0.4, coming in at 0.3%. There we go. Big move, 64,000 now. We'll see if this is a fake out. A lot of times the initial reaction is a fake out, and then they have to, the market reverses on itself. We can take a look at some of these other things that are trading. DXY, big time down. So yes, I wrote yesterday for BM Pro, so that is the Bitcoin Magazine Pro. I wrote a piece yesterday expecting a miss to the downside, and we'll see. It was going to get published this morning, so I'm glad that this came out as a miss to the downside because it was initially supposed to be published yesterday, but due to some miscommunication and me being a little bit late on getting that article in, they pushed it off to today. But this is incredible because now this is going to people are going to expect this to give the Fed room to cut. So this is a pretty big move. 5-minute candle, almost 0.3%, 0.3% on the DXY. Let's take a look at some other things. Is the US 10-year trading? It is, and look at that. Man, it is coming down. I did push out a chart yesterday on Telegram, and here is, well, let's go over this. So this is the US 10-year yield. This was the September effect. That's what Jeff Schneider calls it. I call it the end of Q3 effect because the markets are seasonal. And if you go back, this was also end of Q3, this peak here, and this happened end of Q3, a peak here. So there is definitely something going on with the cyclicality of these things. But here, let's take a closer look at this. So remember, Yields fall because people are rushing to safety. Okay. And yields rise when the economy is going full steam ahead. That's why, since the great financial crisis, yields have been so low because the economy has been so garbage. And we will return to that. A lot of people think we're in a new era of higher inflation and higher yields. I still do not buy that argument because we are at the end of a 75-year credit bubble. And the end of a credit bubble is deflationary. And so people are going to rush into safety. This peak back here on the 10-year is going to seem like, at 5% is going to go down in history over the next 10 years as the best time to buy and just hold on 5% from the United States government. But okay, so what I was detailing here is, the end of the bank term funding program that started last March and ended this March. So coming into that, yields were coming down because people were worried. They didn't know exactly what was going to happen. When that ended, were banks going to explode and blow up? That's what people were thinking. So rush to safety, the yield comes down. Then when it occurred, all clear, nothing really happened. Yay, yippee, we're going up. We're going up. People felt good. It's kind of a reflationary effect, or how when China opened up after the COVID, after their zero COVID, they opened up. There was a brief resurgence, reflation, celebratory economy. That's what this was early this year. Yields were going up because they were able to end the bank term funding program without something big happening. They got through this end of Q1 crunch point. And I was talking about that back then, that I was expecting something to happen to the banks. We did have some little queepy things happen with, what was that other bank? It was, instead of First Republic, it was Republic First Bank. They had some problems. And so maybe that was this bit right here. But overall, there were no problems in the banking system after the end of this bank term funding program. But something happened here, okay? In April and May so far, yields are going down. Now, if we expect we're going into a recession, which is still my base case, then we should expect yields to fall prior. Okay, yields are in control, not the government, not the Fed. Yields are in control. And so, big move this morning. Let's go back to the 5-minute and we can see the yields dropping. But of course, remember, the initial move sometimes is reversed, usually is reversed. Let's take a look at oil. Oil going up, and the S&P futures is delayed on TradingView here, so we aren't going to be able to see that. Okay, let's go back to the CPI and read through the report here. Let's go. All right. The CPI increased 0.3% in April on a seasonally adjusted basis. And you know that my thoughts on seasonally adjusted, I wish, you can do this. You can get the raw numbers from the BLS, which I probably should do and go ahead and chart that out. But seasonal adjustments mask the cyclicality or the seasonality of the markets. That's why people don't expect that. That's why it's a surprise when end of Q3 is where most of the recessions start, where most of the big sell-offs in the market happen. If you go back to all the major crashes in history, they're either September or October. Even in the great financial crisis, you had Lehman and Bear Stearns. They happened in March and September. End of Q1, end of Q3. You had the banking crisis of 2023 happened at the end of Q1. So there's this seasonality to the market, and there's reasons for that, and I've covered that here on the show. It has to do with the year, like typical seasonality for lending for banks, and if you haven't pretty much made most of your profit in the banking industry by the end of Q3, something's really, really wrong. And, you know, the tide goes out at the end of Q3 and you can see which bank is insolvent or not. So, yeah, I've covered that a lot in the past, but seasonally adjusted basis after rising 0.4% in March, the US BLS reported today over the last 12 months, all items index increased 3.4% before seasonal adjustment. Okay. The index for shelter rose in April. This is a big one because we've been talking about this. Shelter is lagging because you don't sign a lease every month. You sign it once a year. Sometimes you can get even a 2-year lease or a 3-year lease, an ongoing lease, a lease that is locked in and grandfather you in to a certain payment for 3, 4, 5 years. And you won't notice the increase in shelter until a while later. So there's built-in lag for shelter, and we've been expecting it to go down. However, with yields higher, I think that has really messed with the owner equivalent rent. So the owner equivalent rent is a survey that goes out to homeowners and they say pretty much, what would you rent your house for? So then they look at mortgage rates. They look at what would it cost to buy this home right now. Home prices have stayed elevated despite higher interest rates. And so because volume has come down, there's a lot of cash buyers out there in the market. So this has messed with owner equivalent rent and I think extended the lag out. However, once we do go into recession, you're going to see that big time happen there. So sorry, Telegram. All right. Combined, okay, as did the index for gasoline, that also rose in April. Combined, these two indices contributed over 70% of the monthly increase for the index for all items. The energy index rose 1.1% over the month. Food index was unchanged. The food at home index declined 0.2%, while food away from home rose 0.3%. I have noticed this. I mean, we don't eat out very much. We did just eat out for I have twins, and so their birthday, we did go out to eat, but we really don't eat out very much at all. And I have noticed food at home, so at the grocery store and stuff, they have stabilized, maybe even come down. But of course, there's different things. Like if the bird flu is going around, then they're going to cull a bunch of chickens, and the price of chicken and eggs might go higher. Okay, so and other products that have eggs in them, those are going to have to go up because of this non-inflationary event that happened with certain food, like when they had the cost of bacon going higher and the cost of pork going up a couple years back. That was not due to an inflationary event. That was a agricultural event. Same with orange juice. If there's a late or early frost, whatever the case is, and it wrecks a bunch of the orange crop, the price of orange is going to go higher, orange juice. But that's not an inflationary event. So anyway, I have noticed that food at the grocery store has at least leveled out, if not some things coming down over the last couple months. All right, the index for all items less food and energy, so core, rose 0.3% in April after rising 0.4% in the 3 preceding months. Indices, which increased in April to include shelter, motor vehicle insurance, medical care, apparel, and personal care. The indices for used cars and trucks, household furnishings and operations, and new vehicles were amongst those that decreased over the month. The all items index rose 3.4% for the 12 months ending in April, smaller increase than the 3.5% last month. The all items less food and energy rose 3.6. So this is core rose 3.6 over the last 12 months. Energy index increased 2.6% in the last 12 months. And the food index increased 2.2% over the last 12 months. So there was also something that came out recently about coffee, and they took the coffee out of the index, and people were screaming bloody murder about that. I do think that's a little bit odd. Coffee is not tremendously expensive. I mean, let's take a look at that. Oh my God, let's go look at this. Futures delayed. Now it's open, coming through on Telegram, or sorry, on TradingView, and big candle up. We have a 0.5% move in the first 5 minutes, which is pretty crazy. While we're here, let's take a look at some of these other things. DXY, little tiny bounce, but selling off still. And finally, Bitcoin. Same thing reversed here for Bitcoin. Very interesting. Okay, let's try to find coffee. And it will be is it this first one? I don't know. Let's try it. Cash contract. I'm not sure if that's the right thing. Look in here. Okay, well, whatever the case, it's not extremely elevated. So there's no real reason to take coffee out of the index. Maybe they're just moving some things around and trying to figure out a good way to measure CPI. Because, if they look, if they could measure inflation, they would just count the money supply. But that has proven to be inaccurate. If you go back in time, let me go back to the BLS website. So if you go back in time, they first targeted M1, and that didn't seem to work. They weren't getting the results by the Fed targeting the money supply in M1, so they created M2 because they thought this would be we aren't measuring money properly. We need to have different things count as money, so let's create M2. That didn't work either. So then they created M3. If you are old enough, you remember there was an M3, and that didn't work either. They couldn't measure the money supply because they needed to act more rapidly and create M4, M5, M6, M7, and keep up with the monetary innovations that were happening and the shadow banking system. Okay, but instead of that, what they decided to do was we are just going to target prices in general, not money supply anymore. So they gave up on inflation, and now they're targeting prices, which prices change for many reasons, as we just went over some of them. All right. Other reasons are like war. War will make the price of oil go up, and the oil is in everything, and so the prices will rise. So, and it gets you in a bad cycle, because if you're targeting prices, then you're using monetary policy to target the wrong thing. So if, say, Iran shut down the Strait of Hormuz and oil doubled, and then the prices of everything went sky high, and now you're going to attack that with using monetary policy. That doesn't make any sense. You're using the wrong thing, the wrong weapon here. So by calling prices inflation, you're actually giving them a completely different target. That doesn't make any sense. So anyway, let's go through some of these numbers. So all items you can see here, April, 0.3, 0.3%. So we'll see if that decelerates again. That Atlanta Fed inflation nowcast, they had the May CPI, or the May, CPI numbers down at 0.1%. So if we have 0.3 now, and then next month we go down to 0.1 or even lower, all right, maybe 0%. CPI is going to come way down. The Fed's going to have the narrative space to cut, and there you go. Okay, food was unchanged overall. Energy, gasoline up 2.8%. I have noticed it coming down though in May. So April, I did notice it going up. It got close to $4 a gallon here in Florida, but now I just saw it at $3.25. So it's coming down in May. Okay, what else we got? So commodities, new vehicles, and used cars and trucks all are negative. Apparel is a little bit elevated. Shelter here, 0.4%. It said it rose, but it is the same as it has been. And it looks like it peaked around January for the rate of change. And now the rate of change has come down, but it is still increasing. When this goes to zero, we're going to see a huge drop because it's a third of the index. And sometimes, like 0.3% month over month. Uh, how much of that is shelter? Probably more than half, right? And so if we can get this shelter component down to zero, then this will come down to 0.1% naturally, and that will be 1.2% annualized. Perfect. All right. So those are the numbers there. Let me take a quick look at the chat here, see what's going on. Thank you guys for joining me. Disclosure Crypto. Hey, buddy. I'm not going to check. Don't know what it is. Not going to check it. I'm worried about Bitcoin. Okay, let me take a look at Telegram, see what you guys are up to. I did see something come across from Point. All right. Yeah, we were talking about drones this morning. Ryan Boxing said Turkish drones are the best. And I was like, the US has been using drones for 20 years in combat, right? So no, we don't know what the US has, but I do know that their doctrine is about, well, first off, their use of drones is 2 decades ahead of the rest of the world. And also the most modern doctrine is over 10 years old at this point. So these other countries that are using it for the first time in Ukraine, you're getting a look at what the U.S. has. That's 10 years old now for the U.S. I saw sea drones are the next thing. Submarines that are drones, and they can just sit on the bottom for years. Maybe with nuclear power or something, and sea drones are the next thing, and the U.S. has already started producing them. So pretty crazy stuff. All right, don't see anything else. Let me check one more time for comments. All right, now let's go to the Bitcoin price and just see what's going on here. So that was coffee. Bitcoin 63,600. Let me go out to the daily and show you guys what I'm looking at here. So this has been trending down here. We have this little blip fake out right here. Let's bring up the 50-day moving average. You see the 50-day and the 50 exponential. The black line is the 50-day EMA, and the blue is the 50-day SMA, or simple moving average. And you see the simple moving average is the level that we need to break to start going higher. That's the one I've been paying attention to. Looks like we broke through the EMA here this morning. We'll see where we end up for the day. But on-chain metrics, I write for Bitcoin Magazine Pro. Let me go to that. And on-chain metrics, he hasn't published it yet this morning, but they're looking pretty good. I can bring that up, actually. Let's go. So this will be an ad for Bitcoin Magazine Pro. I recommend checking it out. They do have some sales every so often. I know that for halving, they had a 50% off sale. I've been told that there's going to be, Bitcoin holidays. There's going to be sales for Bitcoin holidays. So check out a subscription to bmpro.substack.com. My stuff is behind the paywall. But so here we go. This is what we're looking at. Realized HODL ratio continues to decline. If we go to the definitions, realized hodl is the difference between the hodl wave, 1 week hodl wave to the 1 to 2 year hodl wave, but for realized price. So if this is going higher, because when the market spikes, the 1 week old realized price is going to rise very quickly. And the 1 to 2 year realized cap is going to rise much more slowly. So the spread there is going to rise rapidly when you have a spike in price. If it's declining, it's signaling bear market. But if we go to, let's go to, not that one, this one right here. Look into Bitcoin, and you can see this realized hodl ratio is coming down, but we're right in the middle of the zone. So that we're not in danger of any sort of bear market at this point. We never even got overexposed to this. This is just a typical consolidation. You can see one right here, came down, consolidation. 2016, we had this big consolidation right here, and then it went higher, multiple throughout the range. So this is in line with a mid-cycle correction. And that's also what I'm looking for when we're going to call a reversal here, when the bottom is in. When this realized hodl starts going up and we break the 50-day moving average, I think, bam, we can just call it right there. We're going on the next leg of things. And remember, I have said in the past that I expect the price to move relatively quickly in different moonshots, because it's too easy to buy. And if for market participants that have been sitting on the fence and stuff, the market isn't going to be fair. The market isn't going to be nice to them. So it's going to moon. They're going to FOMO in, and then it's going to drift sideways or down for 2 months. They're going to get bored. They're going to sell low. They bought high. They're going to sell low, and then it's going to go on the next moonshot. So the gains are going to be concentrated to a very brief period of time, and we can see that too if we go to the chart. A couple more minutes here, guys, and I'm going to sign off. But if we go to the chart and we go to the weekly, and let's get rid of these MAs. And you just go to this cycle so far. We have this period, brief moonshot, then drifted sideways for a month or month and a half. Then a moonshot, and then drifted sideways down for 2 months. Then a little bit higher, same thing, sideways or down for 2 or 3 months. Then we rally here, sideways for 2 months, then rally here, and now we've been sideways for 2 months. So that's kind of what I'm looking at. Well, I expect this stair-step function to continue. So anyways. All right, guys, let me take a look at the comments. Anything on Telegram here? Nothing? All right. Well, thanks for joining me, guys. CPI went up by 0.3%. That's a big miss right now. And that's going to be it. Thanks, guys. Bye.